Welcome to Inside India. I'm Amitoj Singh, and these are your headlines on Hump Day. India's services sector grows at its slowest pace in 11 months, with a slump in new business growth and hiring as we await the initial read on 2025 GDP later today. Crude prices extending declines as President Trump says Venezuela will hand over up to 50 billion barrels of oil to the US. With Trump now eyeing Greenland as a strategic asset. The ongoing geopolitical tensions have kept gold prices at record highs. The precious metal, though, is pulling back today. We'll discuss if there's more room to run. Let's just jog across to what's happening in the Asian markets. The APAC markets follow the S&P 500, remember, climbing moderately, 0.62%, still a new high, or all-time high during the session. The Dow 2 rising about 1%, NASDAQ climbing 0.65%, but the U.S. crude futures fell 1.3% to 56.39 per barrel after Trump said Venezuela would transfer 30 to 50 million barrels of oil to the U.S. Asia digesting all of that. Defense stocks in Asia losing after a two-day winning streak. So you're seeing a bit of a mixed platform there. Remember, the White House also saying that Trump is considering a range of options to acquire Greenland, including using the military. Australia digesting inflation data below forecasts, and Japan's really down as China has announced the banning dual-use goods exports to the nation over Taiwan, which remains an issue. The Kospi is up a little bit, 1.32% as we see it. Remember, Hyundai jumped over 11% as it announced deploying humanoid robots in the U.S. factories starting 2028. But the Hang Seng has been down now for some time, down about 1%, and maybe profit booking is taking place there. We'll have to watch that space a little closer. We were talking about oil. Let's talk about that. Oil prices under pressure this morning after the U.S. President Trump announced Venezuela will turn over 30 to 50 million barrels of its sanctioned oil to the U.S. At this point in time, the WTI at 56.47, down about 1.16%. The Brent down about 0.82% at 60. In a post on Truth Social, Trump said the oil would be unloaded directly in the U.S. and that it would be sold at its market price. The revenue will be controlled by Trump. Now, the details are sketchy, of course. All this is part of Trump's goal to raise oil supply and lower prices. Trump is also expected to meet representatives from America's largest oil companies this Friday to discuss the path forward for U.S. energy investments into Venezuela, if they do happen, that is. Meantime, the White House said Trump is also discussing options for acquiring Greenland and the potential use of the U.S. military to do so. We'll bring you more details later in the year. Remember, European nations have come together and repudiated all of that, what Trump has said. Now, the Indian markets, they come online in about 45 minutes. GIFT Nifty futures indicating the following. 26,210 is where it sees the market go. Remember, that's just a little bit of a climb from the 26,178 it finished at yesterday. India is awaiting also a decision by the US Supreme Court on the validity of Trump's tariffs. Till then, the market may just be choppy. It, remember, closed lower on Tuesday, even if it continues to flirt during the day with record levels. Some profit booking, some concern over those fresh tariff threat by Trump, perhaps. But what of the potential earnings optimism? That's something we're going to have to watch out for in the coming days. The rupee also in focus and likely to remain under pressure. There's a lot happening. Now, is India's growth moderating? That's the big question we've been following as we've entered the new year. The HSBC Composite Purchasing Managers Index, which combines manufacturing and services, fell to an 11-month low of 57.8 in December from the 59.7 in November. Individually, India's services activity fell also to an 11-month low for the month of December, slipping to 58 from November's 59.8 and 59.3 1 year ago. Manufacturing activity fell to a two-year low of 55 in December compared to 56.6 from November. This is India's government will release the first advance estimates of India's GDP for FY 2026 later today. Analysts expect it to be in the range of 7 to 7.4%. That's much faster than the 6.3% to 6.8 initially estimated by India's government way back in Feb last year. Now, India's fuel consumption has hit a record high in December, rising more than 5% from a year earlier to nearly 22 million metric tons, the highest monthly level on record. Petrol sales climbed over 7%, while diesel demand rose 5% year-on-year, reflecting resilient economic activity. LPG consumption also jumped more than 11%. The data comes as India, the world's third largest oil consumer, faces pressure from DC to curb purchases of discounted Russian crude, with the US warning of possible higher tariffs if imports are not reduced. Ashima Goyal is Emeritus Professor at the Indira Gandhi Institute of Development Research. She is also a member of the Confederation of Indian Industries Economic Affairs Council and a former member of the RBI's Monetary Policy Committee. I could go on. It's just a great pleasure to have you, ma'am. Thank you so much for joining us. I appreciate that. I just want to start with what we've heard, with this data that's come from HSBC. We're also expecting the Ministry of Statistics to release the first advanced estimates of India's GDP for FY26 later today. I'm sure you're looking forward to that. Now, analysts expect it to be in the range of 7 to 7.4%, much faster than the 6.3 to 6.8 in Feb that was thought of. I just want to get what you expect, how much of the growth is likely to moderate, because that's also being factored into in the next coming months, perhaps in December. What's likely to happen?
No, I think that we are on a higher growth path. In the sense despite the tariffs, we are seeing exports have picked up, and manufacturing, for example, has done much better in November. So my own estimate is about 7% definitely growth for FY25. And the issue is that the GST cut and the kind of response we've seen to it has convinced a lot of firms that there is depth of demand in India, and these 2 and 3 tier cities. Earlier, there was this that rural India is not doing well, urban high-end consumption is what's driving the economy. I think that story is fading. So many firms have plans to expand capacity also, and that is going to sustain growth. The government is also maintaining the public investment. Despite the tax cuts, they have room for that without increasing the fiscal deficit. The RBI has cut rates, which will revive consumer durable housing demand. So I think we should be good for about 7%. I think what has helped us is the diversity of the economy. We're not overly dependent on exports. And even in exports, we are increasing diversification. The FTAs with different markets. And for example, shrimps were highly dependent on the US market, but Australia, there's a contract that Andhra has done with Australia, so shrimp exports are going there. So, and this is much healthier, as financial economists say that diversification is the best strategy for a portfolio. I think diversification is helping India.
Okay. Ma'am, we've also seen a push of about 20 billion USD by the Indian government through production-linked incentive schemes when it comes to pushing manufacturing. And the HSBC data reflecting that manufacturing dipped, although it's still above, in the area of constructive and developing and moving forward. How much is involved in terms of the government's role? I just want to understand what is required for manufacturing to pick up the way India needs it to pick up, given what it aims to get to as a developed economy in 2047. What should we learn from the progress that is happening in services? How India's services sector continues to do well, but manufacturing is a laggard. What needs to change immediately, and what could change in this budget according to your predictions?
No, more than PLI, it is continuous improvement in infrastructure and that focus on ease of doing business. There is a big drive for regulatory simplification. People in Delhi say they've never seen the government so active. And the PM was saying that 2025 will be known as a year of reforms, because they've undertaken many initiatives. Regulators, all the financial regulators are working towards amalgamating and simplifying regulations. The labor codes have also been initiated. Finally, they've been pending a long time. And, I believe they are doing very good work on coordination across ministries to make it easier for businesses to set up, reduce the days required. And then infrastructure spending, which reduces the sort of bottlenecks they had to face. And for example, logistics costs have really come down. And then finally, demand. As I said, some of the larger corporates were not seeing that demand in broad-based demand. I think they're beginning to see that now. And so the idea that exports might slow down and affect demand, but exports have proved to be resilient and have found alternative markets. So I think both demand, supply, cost factors are coming together. PLI is there, but it's a small part of it. Also technology, the focus on high tech, that as a country and innovation to ease all that. I think this budget may have some initiatives on that, because that is really important for future productivity increase, technology.
Right, right. You were part of the group of economists who met the Prime Minister just a couple of days ago. Obviously, perhaps it's a private interaction, and I understand that. But what was your takeaway? What stood out? What can you tell us?
Yeah, as I said, this idea that that we were talking about what is required for India to be developed by 1947, Viksit Bharat, the kind of reforms, and as they've already done a lot. There's more planned. And that is why I was saying India's diversity as well as the correct policy initiatives. So I would say it's about expanding potential output through supply side reforms, as well as triggering demand so that actual GDP stays close to potential.
So is this about... Apologies, carry on.
So it's you can't have everything right. Sometimes external observers want all sorts of land, and where there is political resistance. So as a macroeconomist, I say that an unbalanced growth is better, in the sense you are doing enough when macro stability is there, inflation is low, financial sector is doing well, and we are seeing that in India. Balance sheets are very strong, inflation is really low. That suggests that we are below our potential. We can grow more without creating inflation. So there's some room to stimulate the economy, for macro policy to stimulate the economy. So you have a balance between supply side expansion and demand, sort of making so that output catches up with the increase in supply.
I'm going to ask you to name a reform that you think should come through the budget or in the next couple of days through notifications. I'm not sure. Given you were in the room with the Prime Minister, we've already seen the following: GST income tax cuts, labor reforms, FDI insurance reform, ease of doing business reform. Customs is next. The Finance Minister has already said it, coming this budget. Can you name something that you think should happen or you think will certainly happen, please?
As you were saying, this is a private meeting, so I don't want to preempt what the government will do and what it will announce. Yeah, but as you said, the Finance Minister has already announced customs simplification. We've seen movement on other types of taxes, both income and GST. So the next in line is that. Yeah, and I think maintaining the pace of public investment, as well as the focus on technology, there might be some initiatives to, I think markets have thought that India is behind in AI, but given our technology stack and the many applications we have seen, such as UPI, so I think there's a lot of work going on in terms of use cases for AI, how to improve the productivity of workers, and of course high-end innovation, because we are have a much more balanced sort of expenditure profile, say, compared to China, which is heavily dependent on exports. So we have high savings but less than China, so domestic consumption is also important. And so to grow and reach Viksit Bharat, we need labor productivity to rise, incomes to rise. This is already happening. As I said, we are seeing demand in the smaller cities and rural areas. But very important for productivity and incomes to rise without inflation, that using technology to raise productivity. And I think there will be a lot of focus on this going forward.
Ma'am, I was interviewing the IT secretary in Singapore recently ahead of India hosting the India AI Summit. And you're sounding very positive about, let's say, the marriage between what India can achieve with AI and India's digital stack. But my question really is, the concern isn't about what India can do with AI. That is great. We got the digital stack. That's been the talk of the globe. But the concern is around what it does to jobs, what it does to the IT sector losing jobs, cutting jobs. What's your take on that?
So that is one view, but I think more and more the other view is dominating because we've not seen those really huge job losses. More and more the other view is dominating, which is that, there's always been this fear of technology, starting with the Luddites and the looms, the fear that it will create large-scale unemployment. But the world has grown, incomes have increased, and new avenues have opened up where labor is absorbed. So if productivity is rising, alternative avenues of employment open up to meet the demand that is created. And I think we will see more of that rather than large-scale unemployment. The GCCs, for example, have really grown in India. And what they will outsource will change, maybe as AI renders very routine kind of jobs unnecessary. But they will find other things that they need to outsource. And therefore, GCC growth also is continuing despite the AI.
Ma'am, I'm going to package perhaps two questions because they're interlinked. The question really is, can India grow at the pace it needs to without the US trade deal, which there is growing concern may not happen this year? We had Saurabh Mukherjee on our show earlier who said that he doesn't see it happening before the midterm elections. And how you connect that to the fact that net FDI, the concern is around net FDI in India. Last couple of months, it's been dropping big time. How do you look at both these concerns?
This was a thing that I really experienced as an MPC member. When we would interact with markets, I found this extreme focus on the US. And maybe that is partly because there's so much information coming from there, so much FDI or FPI comes from there, etc. So for example, the exchange rate. Because we have a sequenced capital account convertibility, so the interest sensitive flows are not that large. And we were able to move our interest rates with considerable independence from the US. So today I see the same focus on the US trade deal. But as I was saying, there are alternatives. Today emerging markets account for more than 50% of world growth. And US will find this cost that people will develop alternatives if they are not willing to party, right? So I think we need to notice these alternatives and not worry and see that they are viable and not worry so much about the US trade deal. As I said from the beginning, India is not so dependent on the US and trade with the US. It's a very small part of our total exports compared to maybe Japan, South Korea. So we have that advantage that it's not large enough to make a major impact, and we are developing alternatives. So and we want to engage with the US, we have a huge NRI population there. We see a lot of benefit in many kinds of interactions with the US. And so we will continue, we are open to it. We will continue to try to get the deal through, but we will not do it at the cost of our farmers. So they have to understand our sensitivities. So many of the FTAs that have been concluded with India have respected each other's priorities and developed a win-win outcome. So we look for the same thing with the US trade deal. So it is better if there's more, if it is delayed, but we get a better deal than that you sort of quickly agree to something that is likely to hurt large commercial and vulnerable groups in India.
Ma'am, it's a complete pleasure to hear your perspective with your depth of knowledge and experience. I would like to add here that Surjit Bhalla, another economist, I know you respect him a lot, has also indicated that, one of the biggest, perhaps unfortunate things that happened for India's economy was the repeal of the farm laws because of the protests. That's another interesting aspect. Piyush Goyal, the Commerce Minister, is also headed to Europe to make sure that the FTA there comes through. Thanks so much, Ashima Goyal from the Indira Gandhi Institute of Development and Research. It's such a pleasure to speak to you. We're going to be taking a bit of a short break. There's more news and updates on the other side. Welcome back. You're watching Inside India. Some of the stories on our radar just this morning. Let's give you a sense of that. Major European allies, including Britain and France, gathering in Paris to pledge security commitments to Ukraine in the event of a ceasefire with Russia. The talks brought together a so-called coalition of the willing, focused on national NATO-style security guarantees, including strengthened military capabilities and the possible deployment of a multinational force. And for the first time, the US has also publicly backed the broad framework of those guarantees. A U.S. Special Envoy, Steve Witkoff, along with President Trump's son-in-law, Jared Kushner, attended that summit, with Washington voicing strong support for the security arrangements being finalized for Ukraine.
We think we're largely finished with security protocols, which are important so that the people of Ukraine know that when this ends, it ends forever. But we also think, critically, that we are very, very close to finishing up as robust a prosperity agreement as any country has ever seen coming out of conflicts like this.
And yet they have some concerns around Greenland. Anyway, let's switch to Iran. 9 days after protests over economic troubles began in Iran, the scale of unrest has only grown as the rial falls further. The number of dead now standing at 25 people. Iran remains under international pressure to quell the protests peacefully, but witnesses report heavy police presence and violent pushback from security forces. This despite authorities saying they would seek dialogue with protest leaders to resolve the situation. Chinese Premier Li Qiang, along with other senior Chinese officials, met South Korean President Lee Jae-myung in Beijing on Tuesday, with both sides highlighting closer bilateral ties and expanded cooperation. Lee said China-South Korea relations have made steady progress under the strategic guidance of their leaders, pointing to deepening economic and trade links. Lee, who is on his first state visit to China since taking office in June, also met Chinese President Xi Jinping this week. We're also watching tensions between China and Japan. They further escalated, with Beijing now slapping export controls on some products shipped to Japan. Our China reporter, Elaine Yu, has the details. Elaine?
Hey, Amitosh. So China has banned exports of all dual-use items to Japan's military. That includes end users or any other purpose that will contribute to Japan's military strength. And the Ministry of Commerce in China says this is in response to Prime Minister Takaichi's comments over Taiwan back in early November. And Beijing says the comment hints at the possibility of military intervention in the Taiwan Strait and said this is crude interference of China's internal affairs. Now, these are dual-use items, including goods and technology that have both civilian and military applications, and they include a number of rare earth elements as well. Beijing didn't specify which dual-use items fall under the new restrictions, but there are hundreds to over 1,000 items on this dual-use export control list. Now, Tokyo has responded. The Chief Cabinet Secretary Kihara said this measure targeting only Japan differs from international practice and is, quote, absolutely unacceptable and deeply regrettable. He also said many things are unclear about these export curbs, and Tokyo will consider necessary responses as they assess the details. Now, there are signs that this could spill over to the business community in Japan, as well as some Japanese firms have feared already. A member of Japan's private sector was cited by Reuters saying that it took considerable time to obtain rare earth export license approvals as of late November, so just weeks after Takaichi's comment. And now there are reports in Chinese media saying that China is considering tightening export permit reviews for certain rare earth related items to Japan. And this will have huge, far-reaching implications for businesses, especially the auto sector. And Nomura says a one-year ban on Chinese exports of rare earths could lead to the GDP lowering by 0.43%. Amitosh.
Well, that's an interesting number. We'll have to wait and see whether that's something that they want to digest or not. On the other side of this short break, and thanks, Elaine, we'll take a closer look at how geopolitical uncertainties are changing the view on commodities. Stay with us. You're watching Inside India. We're back in 2. Welcome back to Inside India. We are counting down to the market open in India. This is how we are shaping up, about 15 minutes to go before the market opens, indicating that it's going to climb just a little bit from 178 at the end to 205. Remember, it's been flirting with record highs during the day, but then it falls again. This is according to traders, primarily because of uncertainty with the U.S., what the trade deal will look like, whether it will actually happen, Trump's new threats of increasing tariffs when they're already the highest in the world, those concerns are weighing on sentiment, even though there is the positivity around, well, better earnings season coming up. Now, the rupee is something we're watching very closely. How much, according to dealers and traders, the central bank in India intervenes to defend the rupee's levels? That's the big question. At this point in time, it's weakening to the US dollar. It's at 90.18. Now back to one of our top stories, US President Donald Trump announcing Venezuela will turn over 30 to 50 million barrels of its sanctioned oil to the US. MS Now's Julia Jester has the latest.
President Trump made a big announcement via True Social post that the interim authorities in Venezuela, led by President Delcy Rodriguez, would be handing over 30 to 50 million barrels of, quote, high-quality sanctioned oil to the United States. It will be taken by storage ships and brought directly to unloading docks. This effort will be led by Energy Secretary Chris Wright, and this action was previewed prior to this announcement by Interior Secretary Doug Burgum, who said that this is mutually beneficial for Venezuela and the United States, and it will lower gas prices in America. So that mix of domestic politics creeping in there as the United States maintains that this is a national security priority. It's a win for both countries. It'll create jobs and provide Venezuela with the capital it needs to rebuild its economy. Now, in other news, the president is ramping up his rhetoric about seizing Greenland. We are hearing from White House Press Secretary Caroline Leavitt, who says that there are a number of options on the table, including military options. She said that Trump has made it well known acquiring Greenland is a top national security priority of the United States. Quote, "It's vital to deter our adversaries in the Arctic region," adding that the president's team is discussing a range of options for this foreign policy goal. But Secretary of State Marco Rubio downplayed the possibility of military action during a classified briefing with lawmakers on Monday, instead saying the president is only interested in buying Greenland. Republican House Speaker Mike Johnson brushed off that comment, saying he didn't remember it, but if Rubio did say that, he said it in jest. Now, Speaker Johnson was also pressed if he thought it was appropriate if the U.S. used military action in Greenland, and he said no, it's not. And so this could become a potential flashpoint on Capitol Hill as lawmakers are looking to curb executive power as President Trump threatens countries around the world. Back to you.
Thanks so much for that. That was Julia Jester. Of course, the question is whether it's going to be a flashpoint on Capitol Hill, or is it just simply a matter of that they have to get their story straight together. Anyway, the rising geopolitical uncertainty is fueling safe haven demand for precious metals. They're down now slightly, pulling back from those gains. Gold down about 0.5% and silver about also 0.5%. We're watching that space very closely. We're also watching base metals. What are they looking like? There's a lot of renewed interest in that. In the last year, they've seen a massive surge. Copper is up over 46%. At this point in time, we're obviously looking at it down. But remember, when it has risen up over, 46%, the rest of them also up. Nickel, 19%. Aluminium, 24%. That's why we have Jörg Kainer. He's the managing director and CIO at Swiss Asia Capital Singapore, which he calls home. He's been here from the early 90s. Thanks so much for coming to the studio and talking to us. I really appreciate that. I just want to start by understanding what your take is on the animal spirits running towards metals. Because they see fire coming into the jungle in the form of geopolitical uncertainty, exacerbated obviously with Venezuela recently. There's no end in sight so far when you talk about Ukraine, no serious firefighters, even though Mr. Trump is trying hard. And the threat and the spread of the fire in the form of that geopolitical contagion that people are talking about now is likely to continue into 2026. So what do you make of how this will be interpreted by the animal spirits?
I think if you look at the overall picture, we have today an environment where we are redrawing the world map of geopolitics, trade, and so forth. That has implications for currencies. This has implications how I store my currencies, how I save, how I invest. If you are now on the wrong side of the camp, are you willing to buy US Treasury bonds at a yield of 2.5%? Or if you're Japanese and you get the same amount right now in JGBs, do you want to keep the money home instead of having it in the United States? So that means basically, from my point of view, less money flow from Asia Pacific into the United States by default, because the risks are rising, so more money stays home. And that means your interest rate curve is struggling because your funding requirements have to be covered out of internal needs. And it means probably as well credit spreads are widening at the same time. So the one thing which I think gold is attracted to is not just geopolitics, it's actually finance. It's the debt market and the credit market. And I think that's the key issue why people are now piling up into precious metal. I think you've seen most brokerages increasing their exposure to commodities and gold. I think for a particular reason that actually asset allocation needs a better balance and hedge. And gold is actually that from a point of view of global finance. From a point of view of brick finance, it's as well brick pay, where you need gold backing to trade. And that means that's another way basically people increase holdings. So if you look at the United States, the total exposure on total assets, investments in the United States is only 0.4% in precious metal. And I think if you look back in the late 70s, it used to be well over 4. So it could actually go a long way where people just accumulate to have a decent balance in their portfolio to have a meaningful hedge.
Well, you've been bullish on gold for some time now. 9 months ago when you came here, you said back then that the case for gold remains intact for another 3 years, and the price could hit 8,000 to 12K in 2028. We're obviously at the beginning of 2026. So what about the end of 2026? What's your number for that? I
really don't know where we could be end of 2026. I think we're going to have a volatile year, so we're going to get some pullbacks down the road. But I think the trend is up. The trend is up because we are dismantling the derivative book on the precious metal side, and you've seen that particularly on the silver side. It's basically burning like a bushfire as people are trying to square the book. And the same happens actually with gold under Basel III. You can't really short it anymore. So that means you have outstanding contracts, how you're rebalancing them. And so in gold, it already more or less happened. In silver, we're just about there.
But you stick to this number, 8,000 to 12K in 2028.
I think right now I still stick to this number. If I would have to relook at the number, it will be probably upwards to that.
But you do feel that in this year it could actually drop from the current levels because of that uncertainty geopolitically?
No, I don't think because of geopolitics it will drop. It will drop in case we get a larger market correction in financial assets. Okay. We would have a liquidity issue to contain with, and if you have problems with liquidity, people will sell whatever they can sell. Right. So gold is probably going to be the easiest to sell in a market like that, and so that's the risk. That's why I still look that we might have some downside risk in a correction like that. But from a fundamental point of view, where I see we're going to go in this restructuring phase worldwide, we have a long way to go.
Okay. Talk to us a little bit about India. What's different about it? Remember, there's that cultural element that everyone likes to buy gold, silver, blah, blah, blah. But is India putting money in safe havens because of global uncertainty, or is it because it doesn't see foreign investment coming in as much as it should to bring that bull cycle to shore up the Indian market? So don't put money in the equity markets as much. Buy gold. I don't know. I mean, what's your take on that?
If you look at China, particularly in the world, the name of gold in Chinese is money, right? And people didn't really trust the banking system historically, neither in India nor in China. And so it was always money. It was always savings. Mm-hmm. And I think that will not go away because I don't think the environment has really changed. Maybe some youngsters believe Bitcoin will be the answer and somebody freezes the server and they have nothing, right? Mm-hmm.
But you don't believe that the domestic population, both China and India. In India, my sense is that Well, people are actually believing in the traditional financial system backed by the RBI, the central bank, and therefore they're willing to invest, which is why we're seeing domestic savings go up. And we're also seeing that diversify with gold, with equity, with SIPs and everything really.
No, I see the approach of saving going up in India.
Yes.
But gold will maintain an important part. It might be in percentage terms declining, but still growing. Okay. And so I don't see the demand really slowing. If I look at the numbers, it's still really, really firm. In China, it's even accelerating. And if you look at China, the government's actually almost doing marketing in favor of gold investments. And there's been even underwriting gold when we actually basically created the distribution. And so, in other words, the governments are actually keen to have more gold. And if in their economy to have more stability.
The central banks are buying gold.
The central banks are buying.
They're transporting it back from London.
So what's good for the central bank is good for the people in the street.
Okay, fascinating. That's perhaps one of the reasons why we're seeing gold prices where they are. Talk to us a little bit about silver. Measure the strong industrial demand because of solar, electronics, the investment interest, what you're seeing, what you're hearing, which could support the prices, even if the difference between gold and silver is that people believe in 2026 silver will be more volatile.
I think, look, in gold we had Basel III, which was the underlying floor. Now we have an environment where the derivative market has been basically blowing up. That's why we start to see the short covering, which I think is still not really quite covered yet. But we start seeing that silver becomes now a critical mineral globally. So not just in China, as well in the US and everywhere else, because we need a hell of a lot for all our high-tech industries, if it's energy or satellites or mobility, or you can't get around silver. So from that point of view, silver has probably a curve, particularly with AI, which is going to accelerate significantly. And it's going to accelerate this way from a military point of view. If you look at today's hypersonic missiles, they've got about 14 kg of silver. Once they blow up, the silver is gone, it becomes dust. It's not collectible anymore, not recyclable. So people are now rebuilding what they think they're going to need for the future economy. And that means you're going to have inventory building because you can't trust the exchanges to deliver. So the market is going now from a derivative market to a physical market. And it's going to become as well to a local storage environment market instead of everything in the LBMA. And you've seen this last couple of weeks, the LBMA has been basically being emptied at record speed.
Your take on platinum and palladium and copper particularly?
Look, the first two are tiny. I think they're just broken out. They're going to be running as well because they're part of the PMG group. Copper is the best tool for transition of energy. And if you believe you're going to go in a new energy world, you're going to need copper. You need high quality copper. So far we had actually declining supply. And so this gap has to be filled somehow. A copper mine takes ages to build. So we are bullish copper. We are even bullish nickel.
How bullish are you?
Look, if you think we've seen first gold moving, then we've seen silver moving. Now much later we start to see copper moving, and nickel just about came out. So if you look at the gap, the whole CRB is turning. And if it's in the CRB, the laggard is going to be probably energy and the bulks. But even there, I think you already start seeing bits coming into iron ore. You see bits coming in high quality coal. You see actually that people want to have more security on the deliverables as the world changed. And that means you have to start taking off-take arrangements, or you buy the mine directly, or you have higher inventory. Particularly if logistics becomes a problem, is your boat arriving, it's not arriving. So all that is creating a decent demand structure in a world which is growing because we're printing money like there's no tomorrow. If you do onshoring America, that's a huge capital investment cycle, and that's very hungry for commodities.
Okay, but you won't give us a number, target.
Just look at an uptrend which has a long time to go.
Roughly.
Copper can easily double.
Wow.
No big deal.
It can double. All right. That was fascinating. Thanks so much for that, Jörg. Really appreciate you coming on. That was Jörg Kainer, Swiss Asia Capital Singapore Group. Thanks so much for that. Okay. Indian markets have joined the trading day. We'll take a closer look after this very short break. We're back in 2. Welcome back. Indian markets have joined the trading day. The Nifty 50 is down just about, almost 0.2%. Was expected. It has been a bit of a choppy time this week. Uncertainty around the US and India's relationship, trade deal, whether it'll happen or not. No real new information regarding that, except for the fact that there's been an added threat from US President Donald Trump suggesting that if he wanted, he could raise tariffs on India. At the same time, on Friday, there is one major aspect that we're looking at, the Indian traders perhaps keeping a close eye on what's going to happen in the Supreme Court, whether it goes ahead and gives a clean, a green light really to US President Donald Trump's tariffs on the rest of the world, what that impact will have on the rest of the world. If it's not the case, then that could be interesting. Also, we're looking at the rupee and whether there will be further intervention from the central bank in India. We continue, of course, to track steelmakers, which came under pressure late in the trading session yesterday. This after a Reuters report that India's competition watchdog found top steelmakers, including Tata Steel, JSW Steel, and State-run SAIL, breaching antitrust laws by colluding on steel prices. The Competition Commission of India also held 56 senior executives liable, including JSW's Sajjan Jindal and Tata Steel CEO TV Narendran. The probe covering alleged price fixing between 2015 and 23 could lead to hefty fines of up to 10% of turnover. Companies will get a chance to respond before a final ruling is issued. The case began in 2021 after a group of builders alleged that 9 companies were collectively restricting supply and increasing the prices of steel. So there you have it. Well, that's something that's going to play out over the next couple of days, perhaps month. Shares of jewelry maker Titan, we're watching that very closely, up about 3.5%. The company third quarter sales surging 40%, boosted by India's festive season. This is earnings season. We're starting to already see that play out. The later months of the year typically see strong demand for gold and other large ticket purchases. This also, as gold prices, we were talking about that, have been at record highs. Let's also zero in on TCS and HCL Tech now. Both the Indian IT firms are in the green at the moment. They're showcasing at the annual CES trade show in Vegas. TCS is spotlighting how technology is transforming different industries, including manufacturing, while HCL Tech is partnering with Amazon's AWS to forefront latest advancements in automotive technology. Staying on CES, PC maker Lenovo launching agentic AI at the annual event. Emily Tan joins us now with more details on that. Emily, it's great to see you. Happy New Year. What's this about? Tell us more.
Amatoja, we were watching CES in Las Vegas at the Sphere. Today, the focus was on the keynote address coming through from Lenovo's CEO, Young Yuanqing, known as YY in short. And he was talking about their big business partners like NVIDIA, like Intel and AMD. All of these CEOs going on stage, joining YY there. As he talked about AI evolving new capabilities in a 3D world, he said it's everywhere. The transformation is deeply personal, he says. So with that, he launched a next generation AI PCs, a Motorola smartphone, perceptive AI pendant concept, as well as smart glasses. We can see video of Jensen on the stage with him, Jensen Huang. They boast 3 years, or I should say 3 decades long of partnership between Lenovo and NVIDIA. They've teamed up on the gigawatt AI factories, which run on the Vera Rubin platform. What inspired this collaboration with NVIDIA and Lenovo, he says, according to Jensen, Lenovo builds the world's most supercomputers, 1/3 of the world's supercomputers, in fact, so they have the skill in building complicated systems. Lenovo was also unveiling its new super agent known as Kira. This is technology that is built around you. So we know Apple has Siri, Lenovo has Kira. We also got a chance to hear from Lip-Bu Tan from Intel, the launch of the Lenovo AI PC. This is the Aura edition, and Lip-Bu Tan was on stage for this, and also the FIFA brand gaming PC known as the Legion Pro 7i. It doesn't stop there because Lisa Su from AMD was there. The AMD processor is now in the Yoga Slim laptop by Lenovo, and this is Lisa Su.
Customers are asking for systems that can handle much larger models and higher throughput inference, not just a single server at a time. And that's why rack-scale AI infrastructure is becoming so important. To further build on our partnership, I'm really pleased to share that Lenovo will be one of the earliest system providers to adopt AMD's Helios rack-scale AI architecture. Helios is a new blueprint for AI infrastructure, the foundation for the next era of compute. It brings together AMD EPYC CPUs, Instinct GPUs, Pensando networking, and our ROCm open software stack into an open integrated platform for large-scale AI workloads. At the center is our next generation AMD Instinct accelerator, the MI455X.
So it is all about artificial intelligence at the Consumer Electronics Show in Las Vegas. And if we do have shares of Lenovo, let's just pull that up, because with all these announcements, it's a little bit of not what I expected in terms of market reaction here. Down 1.25%, traded in the Hong Kong market at $9.29. This is the world's largest maker of PCs, #1 market share. Amatoch, it's back to you.
Thanks so much for that. That report of yours making me think about the fact that I have to return to yoga also. Thanks so much. Now, in the meantime, in his own keynote on Monday, NVIDIA CEO Jensen Huang unveiled the next generation Vera Rubin chips, which will be launched later this year. He spoke to CNBC about this and explained that as capacity grows, energy and cost efficiency becomes a key priority.
The big picture is to think about these computers not as supercomputers, but as AI factories. These AI factories are producing what is called tokens, numbers. And so you have to use the factory for three fundamental things. The first thing is to train your next frontier model so that you could build the best AI, get to market first. So you want to train it as fast as you can. Comparing Blackwell to Rubin is a 4x leap. And so that 4x jump, you could either do something in 4 months or do it in 1 month. So it's a very big difference. You could either do something with 4 times as many Blackwells or 1/4 as many. Save a ton of money. You could decide to get to market sooner, or you could train your next generation model cheaper. You decide. And so that's training the model. It's really about the next frontier. The second thing is that you have to generate the tokens as cost effectively as possible, because every single generation, the token costs are coming down.
Okay.
Now, when token cost comes down, you can use more of it. That's a very big deal. And so we need to get the token cost to come down, and Rubin reduces our token cost by a factor of 10 over Blackwell.
How much of that is because of energy efficiency?
It's energy efficiency, it's algorithms, it's chips that go faster. In the world of AI factories, going faster is the same as going cheaper. So fast, getting something done more quickly, costs less to do. And the third thing that we have to do is the overall throughput of that AI factory has to increase, or the revenues of the company that builds that factory doesn't increase. And so we have to make sure that every single generation, we increase it tremendously. In the case of Rubin, the token throughput of an AI factory increases by a factor of 10 times. And so the value is unquestionably incredible. And the reason why we're able to do that, even though the number of transistors we used was only 1.7 times, this is where NVIDIA's ability to integrate and innovate across the CPU, GPU, the GPU, the networking, the switches, the scale-up switch, the scale-out switch, and the data processing engine, we literally innovated across every single chip of the data center. This and Vera Rubin, this generation, every single chip changed. 6 brand new chips, every one of them revolutionary. And it's by co-designing it, it's called co-design. It's basically innovating across everything at one time.
Well, that just reminded me of something, Everything Everywhere at Once, that particular movie. That's all the time we have today on Inside India. Keep watching CNBC. There's a lot coming up on the other side, including Access Middle East. Thanks so much for watching.